We have a special Mining Minutes for you this week. Joining me is veteran geologist and founder of Exploration Insights, Brent Cook. We're going to be talking about the warpath last couple of weeks with mining companies and earnings and more coming up. And joining me is Brent Cook. Brent, thanks for joining me today.
Glad to be here, Alex.
All right, so we'll kick off with the last 2 weeks from mining companies. We saw some pretty steep write-downs from Barrick, Newcrest, AngloGold, Kinross, you name it. The seniors did not have a strong earnings season. Did you expect such massive write-downs, such bad quarters from these seniors?
It's a bit of a shock, given what it's telling us that their mines are of poorer quality than we actually thought they were, and they're having to write off a lot of the recent purchases and such. Plus, again, back to their mines. Their mines, they're all in costs. They're in the order of $1,300 to $1,600 an ounce on average for the majors. It makes it hard to make money at $1,300 gold.
All right, we'll stick with Barrick. Now, Jamie Sokalsky, CEO of Barrick Gold Corp, he said he was sticking with Pascua Lama. They also said during their conference call that they would be looking to take some of their higher cost mines offline. What does this company need to do to instill investor confidence in the company again after such a steep second quarter drop?
Well, I guess bottom line is make some money, and that's something that all these guys have to start showing, is that they can actually make money at current gold prices. And that's going to be tough because as the gold price rose, they dropped the grade they're mining and such at the various mines in order to increase production, or at least keep it steady. And now that the gold price has dropped, it's below what it cost them to make it. So how they actually, this is interesting. We're going to talk about this next week in the letter. What they're going to have to do, they're going to tweak the mines, but that's not going to do much. They're going to start high grading their deposits. And in doing so, what that means is they go after the higher grade material and leave the lower grades on the side. Effectively, that sterilizes the rest of the deposit. And I think we're going to see, after these write-downs here, we're going to see write-downs on reserves and resources as they start using a lower gold price to calculate those resources, and they sort of sterilize what they've got. So it's going to get interesting.
All right, just to get this straight, you're saying there's going to be more write-downs after what we've just seen in the second quarter?
Well, across the board, I'm not speaking of Barrick specifically. But yeah, there's a lot more to come, in my opinion. And what's going to be interesting is once they start using a lower gold price, I think Barrick uses a gold price of $1,500 to calculate their reserves. Well, as they drop that down, their reserves are going to decrease as well. Plus, they're going to start high grading their deposits, which effectively sterilizes them for the future, makes them uneconomic. So we're going to see a lot of ounces come off the books.
Let's switch to mining financing right now. Intierra RMG, a resource intelligence company, put out a note today saying there was a 56% drop quarter on quarter in mining finances. That's $2.28 billion in the second quarter, down from $5.16 billion in the first quarter of 2013. Now we know exploration's been cut, but as we were discussing not too long ago, Kinross's Fruta del Norte project, one of your favorite discoveries, one of the top discoveries you said in the last 10 years, just abandoned. So what I'm trying to get at is what are these companies going to do now with exploration? How do they move forward?
Well, that's what's going to get interesting. I mean, the first thing they cut is exploration, because that doesn't bring any income right in. And they're cutting it across the board. I saw today Eldorado cut exploration by something like, I think it was $43 million, which is about half. And all the companies are doing that. And there's no money going into new juniors for the most part. So discoveries are going to decline. And this is setting us up for 1-2 years in the future for a fantastic run on in the juniors, particularly the ones that can survive this period. The ones that actually end up having enough cash to last a few years and have quality projects that are going to be worth something. I'm convinced going down the road that all we need to do is own the companies with the highest margin deposits and just wait it out, because at some point Barrick, Newcrest, Newmont, Gold Corp, they're all going to have to go out and buy these deposits off the margins that they're throwing away right now.
That's a good point. A lot of analysts have said that M&A should be on the up and up. This was before the big write-downs that we just saw. But apparently now is the environment for larger companies to go get those small, good deposits. What do you think? Is this a good time for M&A?
Definitely. I think if you've seen Alamos do a couple of real accretive acquisitions, I think. We've seen B2 do that in the past. Certainly for the companies that are making money, now is the time to start acquiring the very few deposits that do make money. And this is the real problem we face, is that very, very few mineral deposits actually make much money. And that's the brick wall we're hitting right now, is that you're getting increasingly hard to find new deposits that make money for a variety of reasons, be it technical, geotechnical, political, social. All these things are coming in, making even the few discoveries that are, exceptional, more risky. So it's going to get real interesting.
As we spoke about a couple months ago at the PDAC at the bar segment with Daniela and some of your friends, you'd mentioned that there was going to be a mass exodus of juniors in the coming months at that point, which was March. Are we seeing that now? Oh,
for sure. Look at the prices of these guys. I think you look at John Kaiser's data that he compiles, and somewhere in the order of 70% of the junior exploration companies on the venture exchange are trading at under 20 cents and are effectively broke. So yeah, people are leaving in droves where they can.
That's interesting. Actually, not too long ago, last week, an analyst sent out a market note saying that relief measures for the TSX venture were going to lapse after August 31st. Meaning that companies under 5 cents a share might have some trouble sticking around with the venture. It's $2,500 for the companies to stay on the venture, $5,000 for the TSX. What do these companies do? Where do they go from here?
It's tough. They have lowered what they can do financings at. We're seeing, $100,000 financings at 5 cents or less, but that's just survival mode. It's not going to help any of us shareholders. And I think, what we've got to do as investors or speculators in this junior sector is just dump the stuff that doesn't work or is not going to work and focus on the few, the 10% or 15% of companies out there that have the cash, the management, and the competence to move forward and make that discovery that the majors are going to buy. It's getting, in a sense, it's getting a lot simpler to select what you want to own because so much of it's going away.
Okay, Brent, we'll cap it off with maybe the big question on everyone's mind, the bottom. Is this the bottom for miners? Is it in sight? Is it far off? Is it here now? When are we going to hit this bottom?
The honest answer is I don't know, but my gut says we're in for a long bottom here. This reminds me of the 97 to 2001, 2002 bottom when we just bounced along. The sector was unloved. There was the occasional discovery, and that's where to be. But I think we've got a few years of working through this whole mess we've got ourselves into until significant money comes back into this sector. I mean, the majors have got to show that they can make money mining. And until that happens, I don't see large institutional investors coming back into this sector. So in the meantime, basically, we're just picking each other's pocket here in the junior sector.
Well, Brent, that was terrific. Excellent insights as usual. Thanks for joining me today.
Thanks for the call.
And thank you for watching this special edition of Mining Minutes. For wrap-up, coming up next week is the World Mining Congress here in Montreal. Kitco News will be reporting. Stay tuned for that. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can hit me up on Twitter @Alex_Letourneau. Have a good one.